I didn't really know where I was heading when I first got there, but I knew that I was going to develop some really valuable foundational skills and be surrounded by some people that were like me and like-minded. And so that was good enough for me to get started on Wall Street.
Today, I'm excited to welcome my friend Matt Nerlinger to the show. Matt is the CFO of Catula, a holding company that owns and operates for-profit trade schools across the United States, including the Aviation Institute of Maintenance, the largest aviation mechanics school in the country. But long before becoming a CFO, Matt launched his career on Wall Street in Morgan Stanley's equity research group before transitioning into their technology investment banking team. From there, he exited to venture capital, joining Coastal Ventures, one of the few truly tier one VC firms in Silicon Valley, and later became a founding principal at Advanced Venture Partners. So then for people who are like similar in making kind of the same transition that you made, like maybe they're starting out in equity research and then they want to kind of pivot into something like banking, how easy or difficult was that to pull off, I guess, just in your experience?
It was pretty tricky. And honestly, I look back on it and I'm pretty proud of actually how strategic I was. And I don't really think I had totally thought through what I was doing.
If you could go back and give your younger self just one piece of advice, like what would be your best piece of advice, I guess, knowing all the things that you know now?
Yeah. I think I would probably...
Welcome to another episode of Wall Street Diaries, a podcast about extraordinary individuals who launched their careers on Wall Street and use that experience as a springboard to build world-class careers. We're bringing the stories of people who turned that foundation into something remarkable. Today, I'm excited to welcome my friend Matt Nerlinger to the show. Matt is the CFO of Catula, a holding company that owns and operates for-profit trade schools across the United States, including the Aviation Institute of Maintenance, the largest aviation mechanics school in the country. But long before becoming a CFO, Matt launched his career on Wall Street in Morgan Stanley's equity research group before transitioning into their technology investment banking team. From there, he exited to venture capital, joining Coastal Ventures, one of the few truly tier one VC firms in Silicon Valley, and later became a founding principal at Advanced Venture Partners, a growth equity fund spun out of Advanced Publications, which is a media conglomerate that owns Condé Nast, Reddit, and Bright House Networks, amongst others. Eventually, Matt went in-house, joining ServiceNow to lead corporate development and later rising to global VP of Sales and Marketing Finance, where he played a key role in driving the company's explosive growth and go-to-market strategy. His career is a masterclass in adaptability, strategic thinking, and leveraging a Wall Street foundation to unlock leadership roles across tech, investing, and operations. And I'm excited to dive into this journey, how he navigated each transition, what he learned along the way, and how that early experience on Wall Street helped him build a world-class career in finance. With that said, Matt, welcome to the show, my friend. It's been way too long, and I'm grateful you're taking the time to be here.
Thank you, Sen. That was a really lovely intro. Excited to spend some time with you today. And likewise, it's really impressive what you've built with Wall Street Mastermind, and excited to spend time with you and your audience. So thanks, Sam.
I appreciate that, man. And just to dive straight into it, so obviously, as I mentioned, you started your career at Morgan Stanley in equity research before moving over to tech banking, and that's where we met. What made you start on the research side of things? And also, what drove the decision then to ultimately switch over to banking?
Yeah, absolutely. So I definitely had quite a circuitous path to end up on Wall Street. And like many things in life, there's a story behind it, and it's influenced by a select few people. And so the real background on me is, when I was growing up, I always wanted to be a doctor. And I had some doctors in my family, and I got to college and I was pre-med, and I ended up, actually completing pre-med and being a biology major at Penn. Once you actually get to college and think really deeply about what it means to actually, practice a certain profession and really get to explore it, maybe your views change a little bit. It certainly was the case for me. And I was really lucky in that I was at Penn, which was a very pre-professional school and had, pre-professional schools for nursing as well as business, engineering, so that even though I was a bio major and I was focused on going into medicine, I was able to explore other things at Penn once I decided that medicine wasn't going to be the right path for me. And even though I didn't go to Wharton, obviously, at Wharton, there was a lot of recruiting, on-campus recruiting for both internships and full-time jobs. And so I just kind of put myself out there, and I went to a bunch of these recruiting sessions when I was, I guess, sophomore or junior in college. And I met some people that were also at Penn in the College of Arts and Sciences that had gone on and done other things on Wall Street. And frankly, there was one person in particular that I met, a guy by the name of Dave Roman, who ended up working at Morgan Stanley for a long time in equity research, and that subsequently he's now one of the lead healthcare analysts at Goldman Sachs in equity research. And he had studied French and made his way to Morgan Stanley in equity research. And I just found a kindred spirit, someone who was, I thought, wasn't just a business mind. He was someone who was passionate about learning about industries and answering fundamental questions about markets. He told me about why equity research was a great fit for him. And I found someone that thought really resonated with me and my personality. And so I ended up getting really lucky and getting an internship at Morgan Stanley, partially through that relationship I built just, cold. And that turned into a full-time job at Morgan Stanley on the equity research team. To be honest, I don't think I really know exactly what I was getting myself into. I knew that equity research analysts were responsible for, you know, doing fundamental analysis, whatever that meant, doing valuation analysis, writing research, and being really just sector experts and company experts. And I was like, you know what? No matter what, like I won't regret spending 2 to 3 years, building those skills. It ended up leading me down this long career path that you laid out, where I'm a CFO of a company today. But I didn't really know where I was heading when I first got there. But I knew that I was going to develop some really valuable foundational skills and be surrounded by some people that were like me and like-minded. And so that was good enough for me to get started on Wall Street.
So, I mean, first of all, my reaction is I feel like when you go to Penn, the force to suck you into finance is just so strong because like everyone around you is doing it and you just can't help but be exposed to it, right? Because you're in that environment. And if everyone around you is doing it, you have to at least be curious to learn like what is this thing, right? And so I know, I feel like, and obviously we've worked with a lot of Penn and or Wharton students, and a lot of them, just like you, got to Penn without thinking they were going to do fine. Of course, a lot of people go to Penn because they want to do finance, but also some people, they go there without that intention, and then gradually they eventually just end up in finance anyway. So I thought that was pretty funny. But it sounds like that you didn't really even consider banking initially. Then, like, you just solely considered equity research because you met this guy. Is that
Yeah.
right? Okay.
That's right. And I think I was open to investment banking as well. I'd heard the stories about, how many hours people had to work. And I was probably a little bit afraid of that. I'm being a little honest too about also where I kind of um, pegged myself and thought I was capable of, like having not gone to Wharton and feeling like I was really good enough at finance or accounting. I was probably a little bit insecure about my ability to succeed at banking
Yeah.
right out of undergrad. And so like research was kind of this um, Goldilocks opportunity for me where it was finance at a big bank with a training program, but it wasn't necessarily as intense and the same level of competition, at least in my head, that I would get in investment banking. I subsequently would go into investment banking, but that probably was my thinking when I started 20 years ago.
So I guess that gets back to the original follow-up question, which is like, what drove that decision to then switch into banking anyway? And like, what was the thought process behind that, I guess?
Sure. Cool. So I spent, I guess it was a little over 2 years in equity research. Once you're there, you quickly realize that like that job is really about picking stocks. It's about following public markets. And I was never passionate about stocks or markets. What's funny about that is even like when I was going through the internship program, I remember talking to some senior analysts at Morgan Stanley that had been there for 15, 20 years and saying like, are you really passionate about stocks? And they were like, no, I'm just passionate about the companies and the clients. And, I quickly realized that to really be good at that job, you had to be passionate about the stocks. And I just wasn't. Additionally, I will say that I was on the West Coast at the time. So I moved from, I was born and raised in New York, went to school at Penn, and I moved to San Francisco to work for Morgan Stanley. And I had decided in my early 20s that I wanted to stay in California, at least at that time. And have to be awake and thinking about your job at 4 in the morning before market opens also was going to be tenable for me. And then probably the last piece was I quickly realized that the really desirable, at least for me, buy side opportunities, once I had taken that second step and saying like, okay, I am interested in finance and turning over another card and going a little further, the more desirable jobs on the buy side required investment banking. I remember there were some introductions that were made for me for some of these private equity funds, growth equity funds. People were like, I don't really know what to do with an equity research guy. So I was like, okay, I'll go and do the investment banking thing. And that's what drove me to want to go and do investment banking.
Yeah.
That's where I met you.
Yeah, those are all really good points. I mean, I guess if you want to exit to the buy side from an equity research role, probably you do see some people maybe make the jump into like hedge funds, but that's probably about it, right? Like less so, probably like very hard to do or maybe impossible on the PE or growth equity side of things because you don't really have that M&A experience, basically.
That's what I saw. I would say, there were a lot of people in equity research that stayed in research for a long time. Maybe they'd go in-house and go do an investor relations job. But I didn't see a ton of people going into growth equity and private equity or even venture, which was also my mind.
Yeah. I guess I want to touch on something that you mentioned earlier because I see a lot of students nowadays, because obviously I'm talking to students on a daily basis, and I see a lot of students kind of going through the same thing, which is at the time when you were in college, you mentioned you kind of felt like, maybe you weren't like qualified enough for banking, and also you were like a bit intimidated by the hours, right? Which is normal. I think a lot of college students are when they hear about how much you have to work in banking. Ironically, then you pick the job where you have to wake up at 4 a.m. every day. But nonetheless, but like now that you've done equity research, which is, I guess, this thing that you felt like you could handle. And then you then subsequently went into banking and then you did that and you come out the other side of it. Looking back in hindsight, do you feel like kind of how you felt back then was, I don't know, justified? Or is it just kind of like, oh, maybe it wasn't nearly as bad as you thought, but you just didn't have enough confidence and like kind of maybe some limiting beliefs that got in your way?
Yeah, it's interesting. I think when in hindsight, like everything feels like it happens for a reason and everything feels like it sets you up for the next thing. And looking back all these years later, I'm so grateful that I started in research and that I started at Morgan Stanley. I think there was something really valuable actually about going to this big platform like Morgan Stanley. Everyone was excellent. I feel like I got very lucky to have gotten that job and to have started at research, which then honestly helped me get that job in banking because people knew me and vouched for me and I was credible. I don't think I could have gotten a job at, Morgan Stanley banking right out of college. This would have been a long putt for me as this bio major. Could I have done it? Maybe. But I also think I had a lot of maturing to do in my early 20s and like going and showing up for a job, 5 days a week, sometimes 6 days a week, and having to respond to emails, late at night, like getting accustomed to that. It was training wheels for me a little bit to start that out in research, whereas in banking it was just 120% from day one. I'm grateful for how it turned out. There's smaller banks out there that you could work at with, fewer other analysts. I think I also really benefited from the fact that when I, ended up going into banking, there was this larger analyst class, lots of different people with lots of different experiences, people who work better and worse at different things. And so I'm really lucky it turned out the way it did, and I'm happy. And looking back, I wouldn't have changed a thing, I guess I would say. Sam.
Yeah, that's awesome. So then for people who are like similar in making kind of the same transition that you made, like maybe they're starting out in equity research and then they want to kind of pivot into something like banking, how easy or difficult was that to pull off, I guess, just in your experience?
Uh, it was pretty tricky, and honestly, I look back on it, and I'm pretty proud of actually how strategic I was. And I don't really think I had totally thought through what I was doing, but I'll tell you what I did, which was initially I was really trying to monitor for banking opportunities. You can go on the internal portal at Morgan Stanley. I'm sure it's very different now. And I would reach out to the HR team and say, I want to go move into banking. And I would get these kind of hand wavy responses from the HR team. They didn't really take me seriously. And I kept asking and asking and asking. And I didn't know anyone on the banking side, truly. I mean, we had done some IPO diligences where you'd be on an email thread with someone, but like, I didn't really know the folks there. And so finally, again, it just so happened that it was a random encounter with someone who I met who worked out of the Lazard San Francisco office in investment banking, and met this guy at an airport. Just chatted him up at randomly waiting for a plane, and he's like, "Actually, I'm hiring for the analyst class in Lazard San Francisco." And I said, "Oh, I want to do investment banking." Within 2 weeks, I was in the Lazard office and had an offer, and I still wanted to work at Morgan Stanley. And so I went to my boss at Morgan Stanley. I said, I got this offer. I want to stay at Morgan Stanley. Is there something we can do? And then within 3 days of that, I was down at the Morgan Stanley Menlo office interviewing for a banking analyst job and
Wow.
had an offer from Morgan Stanley Menlo to go work there. So I think probably looking back, they were like, who is this guy that is like, so aggressive, trying to like push us to get a job? And like, I was just trying to get what I wanted.
Yeah.
And it just got really lucky that I had this leverage and was able to use it to get a job in that group, and worked out.
I have so many questions about that because I have people asking me about internal mobility all the time, and I always tell them, I don't know, I've never done it, right? But from where I'm sitting, I'm just thinking like it's kind of tricky, right? Because when you go and tell HR that you want to leave to go to this other team, like, are you worried that HR is then going to come back and tell your boss that you're trying to leave?
Yeah.
And does HR actually keep that a secret for you? Or, like, what was your experience with that, I guess?
I feel like I was pretty naive about it. So my advice is maybe not to do exactly how I did it. I had a really good relationship with my boss at the time in equity research. And I think when he did find out I was looking around, he wasn't too happy with me. He did try and help me ultimately, but like there were some tense moments. I think, yeah, internal mobility is really tricky. And I have moved internally a couple times. I guess I did it at ServiceNow as well. We can talk about that if you want. And, you know, it takes having a champion internally that wants you and makes it happen for you. But it definitely can be tricky. And the culture of the place you work, the company you work, bank or non-bank, really matters. It turned out, right, Morgan Stanley did do right by me and they figured it out very quickly and efficiently. And I guess they decided that it was worth it to do that for me.
So HR did go and tell your boss when you were kind of pestering them about internal mobility.
I think when I was having those first internal conversations before the Lazard offer, no one said anything to my boss. Once I actually to disclose that I had this offer, I'm pretty sure I told both HR and my boss, and then collectively they made it happen for me to go and interview.
Got it. Okay. So they initially kept a secret, but they also didn't take you seriously and they didn't really help you. And it sounds like at the time when you initially approached HR, it wasn't like this tech IB job internally was like posted or available, right?
No,
Okay. So,
no.
so did they just like create this position for you because you were about to leave then? Like
As
basically,
far as I can tell, yeah. Honestly, as far as I can tell, I think that's true.
wow. That's awesome. Cause yeah, that is what I tell people too. I'm like, and sometimes it's for full-time recruiting. Like people are like after the summer internship, they don't like their group. So they want to switch to a different group for full-time. And I always tell them like, well, if you have another offer from another firm and you tell them you want to switch to another group, I think they're a lot more likely to, oblige versus if you don't have another offer, I think it gets tricky because then if it doesn't work out, you also don't want the group that you have a return offer from to know that you didn't want to be there.
Totally.
Right.
I
So yeah,
think
that's yeah.
was like looking back on it, it happened. It worked out totally fine. But like, it's not like I sat there with a sheet of paper and was like, okay, which bank do I want to target? I met someone randomly at an airport. It was like Lazard. I know Lazard. That sounds good enough for me. I know people that have worked in that group, right? Like looking back, I was like, actually, when I thought about it, like Morgan Stanley Tech was fantastic. It was in Menlo. I lived in San Francisco. I had to move my whole life. Looking back, I really wish I would have targeted Goldman in San Francisco and maybe they would have taken me seriously. But such is life. And now I'm talking to you here today. But
Yeah.
that's what I'm saying. I wasn't as thoughtful as you might think about this whole thing.
Well, luck always plays a part in everything, right? So you got to be in the right place at the right time, meet the right people. So, okay, so that's great. So then, I guess to transition to kind of the thing you did after banking, then, I mean, we recorded, probably half a dozen of these episodes now, but I think you're the first person that we've had on so far who has actually worked in venture capital. So I want to kind of dive into that a little bit. How did you break into VC, especially at a top tier firm like Khosla? Like, what was the recruiting process actually like? I feel like, there's a lot written out there about the private equity recruiting process, on cycle, off cycle. Like, that's a lot more defined. I feel like it's a lot more well known. Whereas I feel like VC recruiting is just kind of this black box and I don't really hear too much about it. And so how did you kind of get your foot in the door, I guess?
Yeah, you're right. And even back then, and I guess maybe still is, was very black box and unstructured. It's funny story, right? And you know that Morgan Stanley, at least back then, I don't know if it still is true today, in the tech banking group, they were very good at helping their analysts get placed. And there was I think it was Langley, had gotten connected, knew the folks at Khosla, and they were reaching out. They were looking for an analyst, and I'm pretty sure that she blasted the analysts, and I was like, oh, I want to go work at Khosla. At the time, I was doing a bunch of clean tech banking at Morgan Stanley. I'd worked on the Solazine IPO. Khosla was doing a lot of clean tech, so Khosla was like the premier name in clean tech investing. And I told Langley, and I got connected to one of the partners at Khosla, and went through an interview process, met I don't know 4 or 5 of the partners, and ended up getting a job there. But I was the only analyst in my class that worked at Khosla. There was like a handful of investment professionals below a partner. It was very unstructured. But yeah, generally the recruiting process was like maybe a VC firm was using a headhunter and would reach out to the banker, various banking analysts, and you would get an opportunity to go and interview. But it wasn't like these big bulge bracket PE firms that starts the recruiting on this day and ends it on this day, and the start date is this day, and training are these weeks. It was very unstructured. Even the comp was like very unstructured, and I had to negotiate my own comp with a partner at a VC firm. So like it was very, very different than other types of recruiting.
So you're saying when you showed up at Coastal, you were the only, I guess the title would be what, associate? You were the only associate in your class?
Yes. Yeah, that's right.
Wow. At the entire firm.
Yes.
So they just had like mostly senior people, like partners and stuff, and very few junior people
Yeah.
supporting them.
There was like partners, principals, like post MBA people, and then me. But like there was like maybe I'm trying to think 4 or 5 people that were non-partners that were like in that associate, senior associate, principal type.
So it's more top heavy then. It's like a reverse pyramid structure.
Yeah. Yeah. Yeah.
Interesting. Okay. And so you were fortunate enough, you didn't really have to go through like the typical headhunters. You basically just got in through referrals. And then you mentioned like the 4 or 5 interviews that you had to do with the partners. What are VC interviews like? Because I imagine they're probably pretty different from your traditional banking slash PE interviews, which are, there's like very technical. They want to know, like in PE interviews, they want to know how to build an LBO model and things like that. Obviously in VC, I feel like that's much less of an emphasis because you're working with such early stage companies. You're not trying to like build these crazy complex models. So like, what are they testing for, or what kind of questions are they asking you, I guess?
I sort of feel like a lot of the VC partners didn't really even know like really how to engage with me. Like they weren't very difficult interviews. It was kind of like, tell me about you, what you've worked on. I remember like the hardest interview I had to do. Someone asked me to pitch like an investment idea.
Yeah.
I pitched and I threw out an idea. And like, honestly, I was, whatever, I was 24, 25 years old. Like I knew a handful of stats about the company and give you like a few details about what it did, but like I couldn't talk that intelligently with a VC partner. And it was crazy because I pitched him on this idea and it was a clean tech idea and Coastal was a clean tech investor. And the partner kind of stopped in his tracks and like kind of made this face at me. And he was like, you talked to anyone else about this idea at the firm? And I was like, no. And he started grilling me on the company. He was like, well, what do you think about this? And what would you pay for the company? And like, I mean, at that point, like valuation, like I didn't know how to think about valuation for a private company. Really, like, we had done like IPO math to look at like, I knew roughly what, software revenue multiples were. I didn't know what the company's revenue was exactly. And so I kind of floundered on the questions. And it turned out that like the company I'd pitched, the company had like Coastal had like just missed out on the round or passed on the round. And so it was like a very sensitive idea. So like, like the VCs like take their investment ideas like very, very seriously. And so like that, in many ways, I did other venture investment, VC interviews. And generally what people want to know is like, where do you see opportunities for investment? Like in a very critical way, like to your point about private equity interviews, kind of know that you have the technical skills and you can apply it to whatever we're looking at. As a VC, they want to know that you can come in and like, what ideas do you have? What should we be investing in and why? Which was very, very hard for me to logic through. Like I didn't have business experience. We had sit and made models and PowerPoints for, 2.5 years. Like I didn't really know how to think that critically about an investment idea. So it was hard for me to really think through that until you've actually gone through that investment process and like thought through like an investment thesis yourself. It's really hard to do that critical thinking.
Yeah.
But also the interviews were just generally very unstructured. Like just kind of had no idea what people were going to ask you about. And so it was hard. Whereas like private equity and growth equity interviews, it was like the recruiter would tell you, prepare these 10 things, and it was like, you could write it down and prepare a script.
Yeah.
The bench interviews were not like.
Yeah. I guess in a way, probably you probably nailed that pitch then, I'm guessing. Like he probably liked the answer that you gave and he was probably freaked out because he thought someone leaked it to you, but no one did.
Yeah. Right.
I guess in hindsight then, because now that you've worked in VC and then I don't know if you ever ended up interviewing any candidates after you went in, but and now knowing kind of what the job is about, like what do you think they're looking for then? Or like how would you, if a college student came to you today and was like, Matt, I have a VC interview coming up, I don't know how to prep for it, like what would you tell them to prep?
So here's what I'll say about this experience. I think this purpose of this podcast is to reach out to your audience of people who are earlier in their career thinking about what to do next. I think it's important for me to share my, unsolicited advice, which is, going into venture that young is in my opinion, not the best idea. And I learned a lot from that experience. I met some wonderful people, but like to my point about like not really knowing how to do an investment pitch, like I didn't really know how to think about venture investment opportunities at that stage of life. Like I knew how to build models. I could think critically about financial math, like really understanding like business mechanics and durable business opportunities. Like I don't think I really had that capability yet. So, Honestly, I think it probably would have been a bit more valuable for me to have gone somewhere where I could have peaked on that skill set a little more, whether that was private equity or even growth equity, where like you really focus, you're investing behind momentum, and a little bit is about business model. But like once you can recognize momentum opportunities, then a lot of the thought becomes about really valuation and structure.
Mm.
I would also say that, like, again, I was still early in my career. I think I really needed more structure in my life. I knew how to show up to work on time. I knew how to respond to emails and be professional. There's a lot that goes into being a great professional, whether it's like thinking about planning and timelines. And I think I needed more structure in my life. Something that was really beneficial about banking was we had these big analyst class, like, it was this like built-in network of people to help answer your questions and figure things out. When I was one of one, it was a lot harder to navigate that environment.
Yeah.
I probably wasn't as useful to the firm, and it wasn't as useful to me, given where I was in that stage of life. So, but like, maybe there are people that go into venture that young and thrive. I think for me at that point in time, it probably wasn't the best.
I mean, that probably is why also they don't have that many junior people on the team, is my
Right.
guess. Is they
Yeah,
probably know that too.
true.
But they must have liked something about you to, kind of make an exception for you. I guess that's probably like a good segue into, and this is all for my own curiosity as well, because I've never worked in VC, but like what is a day to day of a junior VC professional like? Like, are you just out there sourcing new deals, or what are your primary, I guess,
Yeah,
responsibilities? Just like
sure.
go out and meet a bunch of entrepreneurs and talk to them, and like, or what are you doing, I guess?
So it differs at different firms. And some firms, when they have early career people, they really want you focused on sourcing. There's places like Insight is known, and now Insight's graduated being much more like growth equity and private equity. But
Yeah.
back when I was recruiting there, much more focused on having basically internal people, junior people focused on sourcing.
Yeah.
Most stuff we were not as focused on sourcing. We were really more doing, I would say, three phases of my work was focused on three areas. First was diligence. So partner would bring in an opportunity, and like, you know, they would want me to review the diligence we had received and help them construct a memo and think through critical questions and prepare investment memos. That's one. Two was portfolio company support. And this is where probably the firm leaned on me pretty heavily, because I did have this financial math background. And so I could help think through, look at the P&L and see, like, does this make sense? Can we prove this out? Like, can they actually hit this burn rate? Like, when are they going to run out of money? Like, how should we think evaluation? And we wanted to structure, follow-on investment. Like, how should we structure it? Work with the lawyers to get this done. So I'd say that was the second thing. And the third area was more just like back office stuff. We had a fund accounting team and a CFO, and like, they needed someone to like help that person get information from the portfolio into our systems. And so there was some back office stuff I would be helpful with, that pertaining to things like valuation, financial data. I wasn't doing as much sourcing. I would say over time, as I got more confident in my time at Khosla and kind of knew the company pitch, could really like get in front of an entrepreneur and ask good questions. I would try and source a little bit. But the majority of my time, I wasn't doing that. Looking back, I wish I probably was more proactive about that. But, without really a roadmap for how to do that, I wasn't as confident about doing that early in my career.
So you weren't expected to do it, but you had the freedom to do it if you wanted to, basically.
Yeah, I think it's right.
Gotcha. Okay. Awesome. So you did that. And then after that, you joined Advanced Venture Partners, which I think you were like one of the founding principals, right? So how did that opportunity come about? And also, like, what was it like because Khosla is a very established firm,
Yeah.
but this is like, I feel like on the other end of the spectrum where you're getting in on the ground floor of building a new investment firm. So talk about that a little bit. And also, did that feel like a big risk that you were taking at a time, leaving such an established firm to go to a kind of a startup fund, or how did you think about that decision, I guess?
So I think it's an important, like, kind of, moment to kind of pick up and take a 30,000-foot view in my career at this point in time. So when you look at my career, there's kind of like these barbells of like working in more established places. We're talking about Morgan Stanley, Khosla, ServiceNow. Sandwiched in between, there was a bunch of like higher risk things that I had done.
Yeah.
And so I tried starting a couple of different companies, like literally went off on my own with like one or two people, tried bootstrapping businesses. I got to Advance, which was trying to build the first time fund, basically taking a family office and trying to raise outside capital for the first time to create a fund. And this was a time in my life, and this was probably for like around like 28 to 32 or so, or 31, where I was just risk seeking. I wasn't afraid to like take risk. I wasn't married. I didn't have any kids. Like, I didn't have any, debt. And like, I was able to just go and like try stuff. And I had this kind of, general thesis that like, well, because I didn't have those encumbrances, like I could go and take risk and if something really worked out, like it could be life changing for me. Now, a few key takeaways from that. Number one is those things didn't work out, and which never really struck my mind like that could be possible. And two, when it didn't work out, it actually made it a lot. It was hard to recover before I actually went into service now. So I'll answer your question about AVP, which was like I knew someone who was also one of the founding members there, and they were starting this thing, and the people were really great and impressive, and they told me they were going to be able to raise this fund, and like I didn't have all the details. I probably wasn't like interrogating enough to like really understand what was happening. And then within like 10 months, it was like, oh, whoops, we can't raise this fund, and we're going to just go back to being a family office. And thank you for your time here. Now, had it worked out, like I think Advance and it still is investing today, and like, but it's a family office. But had it worked out, like, could have been the start of really something very special. But like, it was very risky at the time. It was not even a first time fund. It was pre first time fund being raised. And but yeah, to my point, I was just like I was glass half full that this was going to work out and be this big opportunity for me to be a founding principal and have a real meaningful investor opportunity. And for what it's worth too, I also talk about Khosla, which was very early stage, like seed Series A, to AVP that was trying to be more like Series B, Series C. I'm not really even looking at investments before they were more than $10 million of revenue. Like I actually was much more excited about that style of investing because there was real like business and financial data to analyze.
Right.
You can actually analyze momentum. Like I was excited about this idea about being a momentum investor. For what it's worth, Advance, you mentioned actually in your intro, like there was a bunch of these properties that they own that actually could be like partnership opportunities for new investments. And so like, cool, you want to take money from Advance, and like we have all these media properties that we can partner with you on. Like that was very compelling for people.
Yeah.
Or potential investments. And so I liked that. I thought it had this edge relative to a traditional, purely financial investor. And so that's how I thought about it. It was a cool experience, but it was short-lived.
So did the fund just never get off the ground? Like, did you just never end up actually doing any investing because they couldn't raise the money, or you did like start?
We did some investing. Yeah, we did some investing, but it was from the family balance sheet as they had invested previously. Basically, they never raised outside capital.
Gotcha.
As far as I know.
Gotcha. So, because I guess that you brought up a really good point about taking risks, and also the time when you chose to take those risks. Because I was also going to ask you about because you alluded to this, like you also tried to go down like the entrepreneurial path after AVP and building something on your own. It sounds like during that time you were just kind of less risk averse, right? Based on the stage of life that you were in. I actually think that, as you were mentioning, I was thinking to myself, I was like, that's actually a really smart way to do it, because I find a lot of students who say like, I'm just going to go start my own business, like right out of college or whatever. Right. And, they hear stories about Mark Zuckerberg or Bill Gates or whoever who just like, dropped out of school and then like, hit the jackpot on the first try. And I always tell them like, yeah, for every Mark Zuckerberg and every Bill Gates, there's like a million other people who tried to do the exact same thing and failed. But kind of this barbell approach that you took, I feel like on like a risk adjusted basis, that's like the smartest way to do it, because I always tell people like start your career at more established companies, because then you at least have that on your resume. And also you're going to learn a lot by working at those types of businesses, and the skill sets that you develop, the credibility that you get if you ever need to, I don't know, raise money in the future, for example, as well as like the network of people that you kind of end up meeting. All those things can go into helping your entrepreneurial pursuits, versus if you were to, and also like hopefully you've been making good money and you've saved some money up, like you've been frugal and you're, not like whatever, getting bottles every weekend. But like if you save some money up, it also allows you to operate from more of a place of like, I guess, financial stability or strength, where you can take those risks and have a bit of a runway. And if it doesn't work out, you're not going to be homeless and sleeping on the streets or whatever, right? Because I feel like it's very different when if you're starting a new business, especially if you're trying to bootstrap it, raise funding, and you have to worry about like, oh, I got to make money right now. I got to make money like today. If I don't make money today, I'm not going to be able to pay rent. You're going to make very different decisions than if you didn't have to worry about making money today, because sometimes like the best decision for the business in the long run is completely opposite of what might be best for the business today, right? I mean, like you're optimizing for the short term versus the long term. And so that's the advice I usually give people. But I feel like once you've gotten what you needed from kind of the earlier parts of your career, and maybe you save some money up, you've learned what you need to learn, and then you take all of that and you go out and take those risks before you have a family, before you have to have, provide for your kids or send them to private school or whatever. That's like the perfect, I feel like that's the sweet spot in terms of like when you should do it.
I mean, that's ultimately what I had decided. I think yeah, it was, there was a time in my life where I did have that level of comfortability to do it. But, so yeah, it's funny though, like looking back on it, like, so I ended up working at ServiceNow starting in 2018. It would have been an even better choice. Start working at ServiceNow right out of Kosala, right? And like not everything to do. And it's just funny the way these things play out, right? And like in that time, you look at like what was going on in Silicon Valley from my career. I started in 2008. There was this massive wave of growth in tech, both private and public companies during that time. You actually made a ton of money just sitting at a public company from that entire experience. And so, not something I could have really conceptualized how money could compound working in a public versus a private company, but like it's funny how just to level set about like risk adjusted returns, like the best risk adjusted return was probably to sit at Facebook or Google or Microsoft or Amazon, for that 20 years. And, like, but that wasn't clear at the time. It was like, oh, the folks at Uber and Dropbox are going to make all this money. Like I need some version of that for myself.
Yeah. Yeah. I mean, man, hindsight is always 2020, right? I know there are multiple steps along my own career where I look back and I'm like, oh, if I had done this or if I had done that, or if I had, held on to my stock a little bit longer or, like sold it a little bit later or whatever. And it's just like, I just learned that you can only make decisions with the information you have at the time and try to do your best with that information. And then you're not going to be perfect in terms of every decision you make. But ultimately, at the end of the day, if you make enough good decisions, you still end up in a pretty good spot, which I think you certainly have done. So I guess, okay, you try a bunch of riskier stuff. You try, starting this early stage fund. You try kind of your own entrepreneurial things. What were the entrepreneurial things you were doing, by the way?
There were two independent businesses. One was it was in the warranty space. So like different than like insurance, but like you can get a warranty. And specifically, me and a buddy of mine worked on creating a vehicle warranty business.
Hmm.
To this day, I still think it's a reasonable idea. If anyone listening to this idea wants to borrow this idea and build into a business, by all means.
Yeah, Matt will be your seed investor.
The primary way in which auto warranties are bought in this country today is, at the time of sale at the dealerships. You go buy your car and you can buy extended warranty coverage. Cars come with manufacturer's warranty. You can buy extended coverage. It's a very high margin product that's sold within the dealership with very low risk. It's underwritten outside of the dealership. And so the idea was how to replicate those dealer economics outside the dealership. So once you've left the dealer. So it's a very big market, billions of dollars of premiums per year, and it's high margin. And also, we thought that there was a lot of other channels that you could sell warranty that weren't being explored. Repair shops, tire and wheel stores, your auto insurance provider, anyone that has your data around your vehicle could target you with warranty marketing. Anyways, we didn't really get that off the ground, but that was the opportunity we were exploring. The second one was a business opportunity in shipping analytics. So the idea there was working with these two guys that come out of e-commerce, and they realized that any e-commerce provider uses some combination of USPS and UPS or FedEx. Being able to join your data together on shipping, shipping is very important for customer experience. Being able to join your data together from those two disparate sources to understand, when your merchandise is being delivered, shipped, where it was, et cetera, is complicated. So providing that shipping analytics to e-commerce providers and then making money on the back end through a pretty creative way, which was at the time, at least, I haven't kept up with this, but UPS and FedEx for all guaranteed rate shipping. If they miss, basically you're owed a refund, but it's not programmatic. You have to go and like request a refund. So creating a programmatic way to get refunds and basically taking a rake on that. And that business, so that's what that business was.
So was that second business kind of more of a SaaS business then?
It was.
Gotcha. So what do you feel like you learned from those two experiences, or like, I guess in hindsight, because those sound like very good ideas to me, right? But I guess there's plenty of good ideas out there. Like, what do you feel like, why do you think like they didn't get off the ground, I guess, in hindsight?
Yeah. I think things always take longer than you expect. It always takes much longer than you expect to take the idea and then get it into dollars from the customer in your wallet. And so, especially when you're trying to bootstrap a business, you got to be really, really, really patient. And,
Mm,
patience is a virtue. And like, probably, I think with either of these ideas, had we stuck with them longer, like could have been built into bigger businesses.
mm,
But I think, these things take a long time to play out, and they don't play out as you expect. And, you hit roadblocks you don't expect. And that's just true for everything. Go read a book about entrepreneurship. It's like, I'm not telling anything that hasn't been said before, but you got to be really, really, really incredibly patient. And so
yeah.
that's it.
So do you feel like if you guys didn't go the bootstrap route and maybe you had raised some funding for it, it would have been easier?
I don't know. That creates additional complexity too. And honestly, I was just, having come from venture, I was just never keen on the idea of taking VC. I wanted to control.
Mm, mm.
It
Like you
wasn't the
didn't
path.
want to have to like report, you don't want to have to like be beholden to your investors and like do things the way they want to do if they weren't aligned with what you wanted to do. Is that kind of what you're referring to?
Yeah, that's fair.
Gotcha. Yeah, there's always pros and cons with everything, right? Like there's no free money out there where you can take people's money and then not have anything attached to it. So that makes a lot of sense. Okay. So I guess then moving on to kind of your ServiceNow things, you eventually then went in-house at ServiceNow, like you mentioned, to lead corporate development, and then eventually you pivoted, I guess, internal mobility once again, but pivoted into heading up finance for the entire sales and marketing org. Corp dev and FP&A are kind of, I feel like, two of the most common exit paths for ex bankers who go in house. And so you've led both functions at a pretty senior level. So for those who are maybe debating between the two paths, like what are the biggest similarities and differences between the two, in your opinion?
Happy to answer that. And if I can also, I want to tie it back to our Morgan Stanley experience quickly, which was I got to ServiceNow because the head of corporate development was this guy by the name of Dominic Phillips, who was my associate when I was at Morgan Stanley. And he'd been there for 4 or 5 years. A bunch of times I had gone back to him to ask for career advice. And then finally, late 2017, I said, Dominic, you have to hire me. I want to come work for you in Corp Dev. And as he would tell you, and Dominic's not someone that's easily convinced, as he would tell you, I twisted his arm and I convinced him that I'd hire him, which I'm still very proud of to this day. But to answer your question about Corp Dev versus FP&A, Dominic Phillips is now the CFO of Samsara. That's a $25 billion public company. Corp Dev versus FP&A. So Corp Dev is a very natural extension of banking and private equity experience. I think it's a highly, highly, highly encouraged way to go for your first job in-house. You will get to work in small, lean teams. You'll know the processes generally about how to think about M&A, although every company does M&A differently. You get to leverage your skill set in terms of financial modeling, valuation analysis, presentation skills, talking with, entrepreneurs, negotiations. There's a lot of really good value to do that. And I would think in general also is, something of a theme for my discussion is like, it's important to like try and do career steps in the right order. At least for me, I value that. And so going into corporate development was like a really natural way for me to like go into ServiceNow. FP&A, it is a unique skill, and I probably couldn't understand that before I had actually done FP&A. And Sam, I know you did FP&A as well for a portion of your career. It's really hard to really internalize like the process and systems and skills and art of FP&A if you've never done it before. I think the easiest way I try to explain FP&A to people that have never done FP&A before is like when you've built a financial model, you have a P&L and you see revenue, COGS, sales and marketing, R&D, G&A, operating profit. It's like, well, I blow up any of those lines. Sales and marketing, like that's composed of thousands of lines in a company model that is forecast, and you have to understand the individual business mechanics that drive each of those lines. And you're like, oh, well, I guess it's probably a little bit of headcount. It's like, I can now rattle off all the different things that drive each individual line of a P&L. Whereas coming from banking, you can't appreciate that. You also can't appreciate what a planning process is. You can't appreciate what a close process is, what a reforecast process is. And so there's a lot of just domain expertise that like, it's hard, like it's very hard to just come in. And if you're going to an early stage company, going to FP&A, and I know you did this and did it successfully, so kudos to you. Like it's hard to understand like how to create the processes around FP&A if you've ever experienced it before. So Corp Dev was this really great place for me to start, like because Corp Dev at ServiceNow was a mixture of M&A and investing. We actually did do a fair bit of investing off our own balance sheet, which I knew how to do from Khosla. The M&A was mostly tuck-in acquisitions, so we were doing smaller deals. Like valuation wasn't as big a part of the deal as much as really structuring and thinking about product strategy, which I knew enough about how to do from my venture experience, but definitely learned a lot from ServiceNow. And so Corp Dev was just a really great way for me to get on board in ServiceNow I'm really grateful that I started.
So it sounds like you would recommend for most people, if they're going from banking to go in-house, you would recommend between the two, you would recommend they start with corp dev, kind of like you did.
Yeah, I think so. It's not that it's impossible to do it, and frankly, not to get ahead of myself, but I'm become the CFO of this new company. I'm now hiring FP&A people, and some of the people I'm hiring have never done FP&A before. They've done banking and private equity, and I'm okay with that because I know I'm going to put in place a head of FP&A that will teach them the processes and systems of FP&A. So it's not impossible, and I wouldn't totally discourage it. I think it's easier to go into corp dev. Um, I think the more compelling career path, as I've chosen, is to go down the finance route, FP&A, and now being the CFO, because I think corp dev, at least for me and in my opinion, in my experience, and everyone's got different experiences. Like the experience kind of it narrows where you know how to do the deals, you know how to think about strategy, and like kind of do the same stuff over and over and over again. And so, right, if I ended up topping out at being a corp dev leader and did that for the rest of my career, like I really enjoy that work. I think it is really fun work. You get to work with also really senior people in the organization and drive really important strategy at the company. So I think it's a good place to start to answer your question, but not necessarily the place that I would recommend you finish.
Yeah. I guess for people who started in corp dev like yourself, or even like Dominic, I'm pretty sure he started in corp dev as well. If you have the ambitions to eventually become a CFO, it probably at some point you probably do have to pivot over and at least do a stint in FP&A, because that's just such a big part of the CFO job, right? Like if you don't understand the whole FP&A like budgeting process and forecasting and variance analysis and all those things, you can't possibly be qualified to be a CFO of a large company, basically. Is kind of how it.
Yeah, I generally do think that's right, although there are exceptions. I mean, like good examples like Jeff Hoffmeister is the CFO of Shopify, and he was a banker for about, I don't know, 30 years and then went from there directly to being the CFO of Shopify. People do it, but I certainly think a stint in FP&A is very very valuable to understand how planning processes need to work, how forecasts work, how things break in your modeling experience. So I think there's a lot of value in doing that.
Yeah. I mean, just speaking from personal experience, because to your point, I never did the corp dev thing, and I went from, PE right into finance and strategy at Square, which is basically a hybrid of we did all the FP&A, and then we also did what a lot of shadows call biz ops, and then they just combine into the same team. And I think the toughest part of doing FP&A more so like the people aspect. It's like it's like it's not hard to build a spreadsheet, with like headcount assumptions and how much each person is going to cost and roll that all up into a P&L. But it's like, these aren't just numbers on a spreadsheet. These are like, you actually have to negotiate a bunch of stuff with all of your business partners at work who actually own the P&Ls. Like you're just the guy translating it into a model, but they're the ones who actually are going to be spending the money and hiring the people. And of course, everybody always wants more money and everybody always wants more headcount. And then you're a lot of times you're the person who has to tell them no, which is like a difficult job, right? And also a lot of times the people that you have to tell no to are more senior than you. Like I have to tell a C-level exec why they can't hire more people when I'm just like some kid who's 5 or 6 years out of school and they're like, who the hell are you?
Yeah,
And so that was the part that I found to be the most challenging, and also how do you manage the people aspect of things, and how do you kind of be able to, because you're not the one, a lot of times you're not the ultimate decision maker, like you don't have actual decision making power, but you can only influence, right? And so how do you kind of manage that and do a good job? And I think that is like a very unique skill set that not everyone has, and you certainly don't learn that from being a banking analyst, because in banking we didn't have to do anything of that sort. So that was personally the toughest part for me. And then also, like to your point, like in banking, when we were building models and stuff, like each line item on the P&L is just one line. It's like R&D, like sales and marketing, like G&A. And then you just like take it from the equity research report, or you assume like percentage of sales, and then you just like extrapolate that out. You never really do like a deep bottoms up bill line by line, hundreds of lines or thousands of lines or whatever. I think you do more of that like in PE, especially if it's your portfolio company, but like in banking, you certainly never did anything like that. And so just like the level of granularity when it comes to the model is in a completely different ballpark, right?
I think you bring up a really important point about the people aspect of it, and can be actually, you're right, and I'm glad you brought it up. It can be shocking actually when you're like, wait, everyone's on the same team here. We're all at the same company. Our business card all says the same name on it, but you can actually be at odds with people, both in corp dev and in FP&A. It's a really good point. Like in corp dev, some person wants to get a deal done, and you're like, we shouldn't pay more than X times sales. And they're like, no, 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 I wanted to get this deal done. Get the deal done. Well, the entrepreneur wants more than what we're willing to pay. And they're like, why are you holding up my deal, Matt? It's like, because someone has to be thoughtful about the analysis here.
Wow.
It's gonna be true in FP&A, where it's like we create budgets, and like in many times the FP&A person is the arbiter or the referee of budget management, and so it can feel like you are facing off with people internally at the company, and that can be uncomfortable.
I feel like, I mean, look, there's no perfect job out there. Like every job comes with like its trade-offs and whatever, right? I do feel like when I think back to like my banking PE days versus kind of like working in-house, I just feel like when I was working in-house, there was so much more politics. Because in banking and PE, I'm not saying there's no politics in banking or PE, right? But I'm sure there is. And maybe I was just there when I was just a junior peon who didn't matter. Like, it's like in Game of Thrones, you're like the foot soldier and no one cares about you. So like you're not part of the politicking. But I do think like in kind of the banking PE environment, it's just like you're in a deal team, everyone's trying to get the deal done, you're all rowing in the same direction. And there's a very clear like hierarchy where like you listen to the guys above you, and it's very simple. Versus like in an in-house, in a more corporate environment, it's like there's all these different teams and different people have different yes, you're all on the same team, but then you're on like different sub teams and you have different objectives. And, like sometimes your objectives are kind of conflicting with each other. And then everyone is kind of fighting for a finite amount of resources, right? Like there's only so much money to go around. We can only hire so many people, and every team wants to hire more, and it has to come at the expense of someone else. And so it's just like, it's very tricky, right? And I think some people are very good at that, by the way. And like, I also think that, if you want to succeed in kind of that in-house corporate environment and you want to kind of move up, you have to be good with people. You have to be good at managing that. And if you don't know how to play that game, which honestly, like admittedly, I don't think I'm very good at playing that game. And so like that's probably why I don't think I did as well as I could have in that sort of environment. It's like at the junior level, it doesn't really matter. As you start to rise up, it starts to matter more and more. And I feel like that becomes like kind of the most important part of your job. Yeah.
Yeah, I think you're right. I think politics definitely do scale as you get more and more senior, right?
Yeah, for sure. So I guess on that note, obviously well, I don't know if it's recent anymore. It's been a few months at least, right? But you recently made the transition out of ServiceNow into your first CFO role at Cotilla. Congratulations on that. Um, and so that must have been a very big shift because you spent years in tech, both like working in-house at a tech company, but also prior to that, covering tech, investing in tech. Cotilla is obviously not a tech company. So like, how did that opportunity come about? And what about this opportunity excited you enough to leave an amazing company like ServiceNow?
Yeah. So I'd been a VP of finance at ServiceNow for a little while, and my ultimate ambition was always to be a CFO. ServiceNow was great, and an amazing run. A lot of time I was there, went from being $30 billion of market cap to $200 billion market cap while I was there. And I think the reality is sometimes like to move up all the way up the chain, like you have to leave to do that.
Yeah,
And
for sure.
is it possible that with enough time and effort and energy, could I become the CFO at ServiceNow? Yeah, but a very, very, very small probability.
Yeah.
And so
Just curious, how many VP of finances are there at such a large organization like ServiceNow?
I would say people with a VP title that are ultimately in the finance organization, something on the order of like 10 to 20, if I had to guess off the top of my head.
Wow. So like you're responsible
Plus like
for
FP&A, IR, treasury, accounting, um, workplace services. ServiceNow is a 30,000 person company. So yeah, there's fair bit of that. But like,
right, which is also why you're like as VP of finance, like you are just responsible for the sales and marketing lines on the
right,
P&L, and then there's like different VPs responsible for other lines on the P&L.
exactly right,
Because it's such
exactly
a
right.
large org, you can't have just like one person manage the entire P&L basically.
Yeah, that's exactly right.
So like to make the to like CFO of that type of business, basically there's you're competing against all the other VPs and then also probably like a bunch of external candidates as well, right?
Totally. Yeah.
Yeah.
Yeah, absolutely. And so I wanted to become a CFO. And so naturally, the thought is you have to go elsewhere and probably go to a much smaller company. And for a first time CFO, I would say the opportunity set is like generally companies that are like 100, maybe $200 million revenue or below. I think usually when companies get much bigger scale than that, they're like, I need someone who's been a sitting CFO before. They don't really want to take a chance on someone who's not been a sitting CFO before. And I
Right.
will say, even with a lot of high quality businesses that are, $50 million of revenue, they're like, I need a player who's taken a company public before.
Mm,
But nevertheless, it is and still was a long putt for me to go from being a VP of finance to being a first time CFO. There's a lot of things that the CFO manages that I had never seen touch before.
mm,
I work closely with accounting, and there's aspects of my job at FP&A that deal with accounting, but I've never run an accounting function before. I've never run a tax function before.
right.
And so now being in charge of that, right? Like someone has to trust me that I can scale to learn those things. Kotula, so yeah, generally speaking, I was probably looking at, enterprise software businesses as being like the right next step for me, given I knew ServiceNow so well. And there were enterprise software opportunities that I did look closely at. What's tricky about, the private markets these days is really hard to know like how and when you will get liquidity and like what equity is really even worth. And what's so important, I think, generally, especially as you get all the way up the ranks. And again, I haven't done it yet. I'm in the process of doing it. So like I'm speaking a little bit based on what I have heard and know as much as like what I'm experienced. You need to continue to show winning. You need to continue to show momentum of like being a part of winning stories. And so, yeah, there were businesses of $100 million plus ARR that wanted me to be their CFO, but I was like, I don't know that the equity is ever going to see the light of day. And yeah, there's nice, you know, brand name venture capital is fine. But like, if this thing goes nowhere in 2-3 years, like, what story am I going to tell about this? And so, but generally speaking, I would say like 95% of the opportunities I was looking at were enterprise software, maybe some consumer tech as well.
Yeah.
Patula was very unique for me. It was brought to me through a recruiter, a very well-known recruiter, and someone who I actually was talking to about a bunch of enterprise software opportunities. And she said, you know, this business is incredible, and there's an executive chairman who is leading the search, and he's in New York, and you got to meet this guy. He's incredible. And I said, okay, like, I could go and take coffee with someone. And I met the executive chairman of Kotula, and he was and is exceptional. And so that was like number one. Like, I met someone who was like, I'm going to work with and for someone that I'm like really inspired by and admire. The second thing was financials of the business. So, and where I'm going to get to basically is this, like, there's three key things that matter to me with creating, the CFO opportunity. The first was the people. The second was the business fundamentals. So this is a business that was family owned and operated for 50 something years. You gave a bit description of the business, but it's a for-profit trade school network. We own and operate 20 trade schools around the country. 15 of those are focused in the aviation maintenance technician space. The business won't give maybe exact financials, but is hundreds of millions of dollars of revenue and has grown incredibly well since it was acquired by this executive chairman and an investor group that acquired the business.
Mm.
So it's growing well. It has healthy EBITDA margins and is free cash flow positive. So really, really good business. It also has durable moats around it. So in the for-profit trade school, there's a lot of regulatory considerations you have to be aware of. This business has some durable competitive advantages given its legacy and the campuses that we already have.
Mm.
The third thing really is the mission of this business. So we operate 20 trade schools. We currently, as of where I sit right now, have over 7,000 students enrolled in our programs, and all of which are getting a degree in a skilled trade that will allow them to meaningfully improve their economic outcomes from before when they started school.
Mm.
I worked at a business called ServiceNow where, we would preach ROI, and like there clearly is valuable ROI of using ServiceNow, like in terms of, cost mitigation, productivity improvement, access to information and data. Like it is very valuable, but like I could so clearly see the direct impact I could have on thousands of people's lives showing up to work every day. And that was very compelling for me.
Yeah.
So those three things, the people I get to work with, by the way, there's an amazing CEO and management team, the business fundamentals of being at scale, growing well, profitable, and three, the mission and the outcome that I could have for these thousands of people became very compelling for me. Now, there's days where I wake up where I'm like, this is very unique. Like I have to learn something new in for-profit education that I never knew before. And it would have been easier for me to ramp up, come to work for an enterprise software business for sure. But I've been there for, 3.5 months right now, almost 4 months, I guess. And it's actually amazing the ability that I feel like that I've had to learn and to scale and to make direct impact in that period of time. And so I'm very encouraged by it. And, I didn't lose my enterprise software knowledge. People still call me and ask me questions about like how to create a sales comp plan and how to think about sales planning and how to think about how to benchmark sales and marketing ratios. And those are still stored in my head.
Yeah.
But yeah, and I also, to the point about, there were enterprise software businesses where I didn't feel like that compelled that there was going to be a winning outcome. Like, knock on wood, like I don't know everything, but I feel compelled that like we are going to have a also positive, valuable economic outcome here, and then I can tell a winning story behind it. I hope that's true, but that's how I feel right now based on the data that I.
No, that's awesome, man. That sounds like an amazing opportunity, honestly. I mean, the scale, I didn't realize Catula was that big, but the scale that you're talking about is I mean, they're private, so they're a private company, but really they're like they have the scale of a public business, basically, right?
Yeah, I think someday. That's right. I think, for when you and I were bankers, the scale required to be public has changed with time. But yeah, that is the hope.
Yeah, for sure. And I think your point about being able to see a tangible impact on the people that you're going to be helping, which is all the people that are going to your trade schools and getting better jobs because of it. I mean, I completely understand what you're talking about, and that resonates with me, obviously, because I mean, I don't think of Wall Street Mastermind as a trade school, but like, similarly, like I think of what I'm doing as helping people get a better outcome with their career.
Absolutely, Sam.
Yeah, and helping them improve their career earning potential, and that is a very fulfilling thing that I didn't feel from any of my previous jobs. And just like you, like I've worked at really large, reputable, quote unquote prestigious, firms, and high paying. Obviously, I get satisfaction out of all of those things, but it's a different thing when people come up to you and like thank you for how you've like improved their life, and it's just like that's like a non-monetary thing, but I think it is worth a lot, right? And so I completely understand where you're coming from there. I'm curious about, because obviously you met this executive chairman, and obviously he sounds like he's a very impressive guy. Like what does he do? What is his background? It sounds like, is he like the private equity guy? It sounds like he basically went and acquired this business. So he wasn't the guy that started it, but he bought it and he owns it now, and then he's just kind of trying to put the right team in place, basically.
Yeah, that's right. Funny enough, he was a public equity investor for many years, and then decided he wanted to do something more entrepreneurial. And it's remarkable what he was able to put together, both to develop a thesis around this space and put together the capital and the people to acquire this business. Yeah, it's pretty remarkable.
Gotcha. That's awesome. So I guess speaking of Catula, and also like the reason why I even got you on this podcast in the first place was because like we were talking about how you are actively hiring, right? As a new CFO, and you're building out your team now, which by the way sounds like a very exciting opportunity for those of you who are watching this. So Matt is hiring. If you guys are interested, you should definitely go check their careers page. But what do you look for when you're, first of all, what positions you're looking to hire on your team right now? And then secondly, what do you look for when you're bringing someone onto your team? Because obviously you've hired a ton of people over the years, I'm sure, like, running teams at ServiceNow and even probably before that. What do you look for when you're bringing people on a team? And also, like, in your opinion, is there like one thing, or maybe it's a couple things that really separates like the great hires from, just the good hires or the okay hires? Like, are there certain things that you're always like, yeah, you have to have these, one or two things?
Yeah, sure. I break it down to a few key areas to answer your question directly. So what am I hanging for right now? July 27th, 2025. So I'm building an FP&A team from scratch right now, and so trying to hire FP&A leads, basically people who will be responsible for different portions of the P&L, like we talked about before, or subsegments of the P&L. And those leads are probably people 5 to 8 years out of school, some combination of banking plus maybe PE or in-house finance or corp dev experience. I think the experience is valuable and matters, and I'll tell you why, as it comes down to like the skills I look for in individuals, which I would probably say is the three or fourfold. So the first thing is like you've got to be very competent and strong with financial math. And so the financial math that we're doing day to day, it's diverse. Like you started giving examples about like headcount math. Well, tomorrow it could be lease math, and the next day it can be uh, you know free cash flow math. And so like you've got to be confident and skilled in like how to think about different portions of the three statements and how to like understand how things work together. So that's one. And I think honestly the banking and I was in private equity, but definitely the banking experience plus private equity like usually is a very solid footing for being able to do that very well. And also like working in a small team still with like not many layers between the CFO and you, like then being able to do it like faithfully without, tons of mistakes. Like detail orientation really matters. It mattered in banking. I'm sure it mattered in private equity. It matters here too, because like we create a forecast and it's like those numbers go to the board. Like they got to be right. And so we have layers of checks in as part of our process, but like being detail oriented is super important. With math, when you're presenting data, like numbers are numbers. If you said the number was 7 and it's actually 8, like and you didn't mean 8, you said 7. Like when you're talking about other things, you could be like, oh well, words I really meant to say this, and this is how I was describing it. Like math is math. It's like numbers, like you can't change them.
Yeah.
Being detail oriented is 2, and then 3 is three I would say is humble and hungry. Like you're working in for-profit education, but just generally speaking in strategic finance, like you want to be humble and thoughtful about your ideas. Like you're going to be dealing with senior executives, and like so you present ideas in a way where like you are willing to listen and learn, because someone might have a different perspective than you about how to think about a model. Maybe the fourth thing I would say is kind of adaptability and ability to self-learn. Like there's new things that I'm learning every day about this business, like, or do show an intellectual curiosity and ability and willingness to roll up your sleeves and learn something new, and like spend time in your off hours thinking about like how we should be thinking about planning the next time around, how we should think about budget management the next time around. What do you know about what our competitors do that we do? Like bringing that level of knowledge to the game, I think is super important and really makes you stand out. So those would be maybe the 4 key things that I'm looking for in anyone who does this.
Yeah, for sure. That makes a lot of sense. So I guess for those of you who are watching this, if you have these qualities and you want to work for Matt, well, what's the best way for them to apply, I guess? Just go on your career page or?
Yeah, maybe we can put a link in the podcast notes or something to the website. It's probably the easiest thing for us to do. Yeah, we have a career page allow you to apply. Probably also put my personal email, my work email rather, on the in the notes as well.
I don't know if we want to do that.
All right, whatever's best then.
I'm not sure. I mean, like, in case this episode goes viral and your inbox just gets completely, flooded. No, but we'll definitely, at a minimum, link to your career page, and we'll figure out how to get the right people in front of you. Because candidly, I think this sounds like an amazing opportunity to get in on the ground floor of essentially a brand new team for what sounds like a very exciting business. So if any of you are interested in that, highly encourage you to reach out and apply. So, okay, we've spoken about Cotulla. We've pretty much spoken about all the various stops along your career. I have just a few more kind of higher level, more abstract questions, if that's okay. So first one being, you've done all these things throughout your career, really a diverse set of experiences, I would say. What do you feel like is the hardest decision you've ever had to make in your career, and kind of like walk us through that? And do you feel like you made the right decision in hindsight, and kind of, what was the outcome, I guess?
Yeah. It's funny, like looking back on all those different decisions that we just talked through, like they all seemed hard at the time. I don't know what was like hardest. Like
life is hard.
Hard, right? Like they all feel very monumental. Like choosing to go and walk away from pre-med to go into finance felt really hard. Choosing to walk away from, research and going into banking, which I knew was going to be a lot more intense, was hard. Leaving Morgan Stanley and being like, I wanted to make sure I got like the right exit opportunity out of Morgan Stanley was hard. Leaving ServiceNow felt really hard, where it was like this place that I'd worked. It was the longest place I'd ever worked by far. I was very comfortable there. Like I didn't have to leave.
Was that like 7 years, 8 years?
7 years. Yeah, 7 years.
Ooh, that's a long time.
Top when I was told them that I was leaving, like, what are you doing? You're getting married this year, which I am. I'm getting married this year. Like, why would you introduce that stress in your life? Well, your opportunity arrives. All these things can feel really hard. They all felt hard. But I also am someone that I feel like I like put a painstaking level of detail into every single career decision, and even if it probably looking back wasn't as shouldn't have been as tough a decision, but I make it hard on myself.
Well, I think it's probably what it probably is we don't remember the decisions that were easy, because those are things that you don't even have to think about. And remember all the hard decisions. And usually the hard decisions are the ones that feel very consequential, or are very consequential. And there's a lot at stake and a lot on the line. So I will say, like, yeah, I mean, every career decision you make can be very consequential, right? Like it could be the place that you spend the next 2, 3, 4, 5, 6, or 7 years in the case of ServiceNow, which is a significant portion of your career, and also picking the right company versus the wrong company. And sometimes the difference isn't really that obvious, but the outcome could be significantly different, right? Like I know people who join the right company and have life changing financial outcome, and I also have friends that worked for gave 7 years of their life to a startup that ended up becoming worth zero. So it's just like it can be very consequential, and so that's why it does. I guess, do you have any maybe a slightly related question to that is like, do you have any advice for, since like all of these decisions feel hard at the time, like, do you have any advice on how to best approach these kinds of big, weighty decisions, I guess?
There's a couple things. And one of it is that really it's a piece of advice that our first it's our first outside CEO at ServiceNow was a guy by the name of Frank Slibman, who took ServiceNow public and then ended up becoming the CEO at Snowflake and took them public. And he's got a quote in his book, and I'm paraphrasing here, but it's something to the effect of like, don't ask anyone else for advice when you're making a career decision. That decision, you have to own that decision for yourself. It's very personal.
Mm.
And I love asking people for advice. It's okay to get input from people, but like make sure when you make that career decision, you're like, I'm owning this. Don't be like, well, Sam told me this was okay, or Matt told me this was okay. Like make sure that you own it for yourself and you know why you're doing it. And you can look at your piece of paper, handwritten or index, whatever, however you make your decision and come up with your criteria. If you look at it and you're like, I'm good with this. No one else told me, like they may have given me inputs on the ups and the downs, but I'm good with this. I think that's probably the best piece of advice I can give about making a career decision, because at the end of the day, when you look back on your life, like you have to live with it, no one else. And so, so long as you feel confident and comfortable with it, like that's what matters most.
Man, that is so good. What is this book called? I want to check it out.
He's got 2 books. The first one, I don't remember which one it's from. First one is Tape Sucks, and the second one, I'm blanking. I'm sure I can find it real quick.
I'm sure I could look it up just by looking up his name.
Amp It Up.
Okay, gotcha. Man, that's really good advice though, because like I feel like obviously in my role running Wall Street Mastermind, like our team, we're constantly talking to students about their careers. A lot of times, they're making decisions on whether to work with Wall Street Mastermind or not, and then they're going and soliciting feedback from a lot of people. It could be like parents or siblings or upperclassmen or whoever, right? Like friends. And I always tell them the same thing. I mean, I didn't know about this quote from your CEO, but I was telling the same thing, which is like, dude, ultimately, like all these people that are telling you these things, okay, let's say you go with what they tell you now. Are they going to be responsible
Right. Yeah.
for your decision if it doesn't work out? Like the last thing that I want to see is 5, 10, 15, 20 years down the road, if things don't work out the way you intended, you're not going to be able to go back to mom and dad or whoever told you, to make a certain decision like, hey, like, why did you tell me to do that? And look, now things didn't work out. Now, like, you have to, I don't know, fix it. Like, no one can fix it for you at that point. So you really have to take ownership of something as important as your career. Ultimately, like, even if you take input from other people, you have to think like, am I going to be okay with this outcome?
Yeah.
If it doesn't work out, like,
That's right.
because otherwise you're going to have a lot of resentment towards like whoever it is that you listen to, and that's just not the dynamic that you want to have. So yeah, I think that's great advice. But what, on the flip side too, is like, and we talked about this a little bit earlier too, you make the best decision you can with the information you have at the time. And if you feel like you've approached the decision the right way, it doesn't mean it's always going to work out. But if it doesn't work out, then you're okay with that because you did the best that you could at the time. Right. And so the biggest thing is just like to not have regrets, basically. Right. Yeah. So I guess the other question that I have is, I feel like you reinvented yourself multiple times along the way. You started out as a banker, then you became an investor, you're an operator, and now you're obviously CFO. Has your definition of success changed along the way? Or how did you define it when you were first starting out versus like kind of how do you think about it today, I guess?
It's a really good question. I don't know that I knew how to define success starting out. I think it was probably being associated with certain brands and feeling like enough validation by being at a certain brand and knowing how people felt about me as a result of that. I think it was like very outward looking. It was like it was the mirror. Like, how did the mirror make me feel? And I think I've been able to now define success much more inward looking, which is benchmarking myself against myself. Uh, and what am I capable of, and how am I doing along the lines of what I think I'm capable of? And I would say that I think the most like one of that just come from years of experience and probably maturity. I think also, I'm a big runner. I love to run, and I compete, and I run half marathons. I've run a full marathon, only half marathons, and not the best. Never been on the podium. I've gotten better every single year, and I have new personal best every single year. And I'm pretty fast. My best friends that I run with, they're faster than me. But I've never felt bad about finishing a race where I felt like I gave my best, and I think what I was most capable of. And I find that that's such a better benchmark for defining my own success is like, did I do everything that I was capable of? I may not be the CFO of like the biggest, fattest company on the planet, but I'm really proud of the company that I am the CFO of. I think it is a fantastic company, and
Yeah.
I'm proud of it. I know why I'm proud of it. And so I think really getting familiar and comfortable with what you think your own internal capabilities are, and knowing that there's things that will impact you outside of your own control, but trying to be the best at what you can control, what you do influence, and getting better at those things every single day is a much more impactful and valuable way to know if you're doing well than anything else, is my humble opinion.
That's such a good answer. I feel like we've all been there, at least people who are our age, which is when we're younger, a lot of the validation does come from like kind of more externally, right? Like, well, it's just like even growing up in like middle school or high school is like, it's about being popular and what other people thought about you, right? And then like how good of a college did you get into? And then like how good of a bank did you work at? Like if you work at Goldman Sachs and it's better than I don't know, then it's better than Morgan Stanley, or like Morgan Stanley's better than Deutsche Bank or whatever, right? It's just like obviously now that we're older and we understand, it's like, oh, that's so silly, right? Like there are people who work at Morgan Stanley that are better than Goldman Sachs and vice versa or whatever. Like it has really nothing to do with that. And I'm not saying there's no value to being like at a reputable brand name place, by the way. I think there's a lot of value to that. Like it does help your career. It does give you more credibility. Like for better or for worse, people do assign value to that when they see that on your resume. So I'm not saying don't work for reputable firms early on in your career or whatever, but I absolutely agree with you. It's just like at the end of the day, the only person you should really be competing against is yourself. I feel like when we were younger, especially for a lot of folks that end up in banking and whatever, it's like for a period of time, you've always been like the best.
Yeah,
Like
right.
you're the best. You're the valedictorian in high school, and then like and then you get to college, and I don't know. I feel like I was valedictorian in high school, for example, but like I kind of realized very early on, like pretty much as soon as I got to Berkeley, I was like, oh shit, there are a lot of people that are way smarter than me, right? But like maybe you're smarter than me, and even in college you were top of your class. Then you get out to the workplace, you're like, oh wow, there's a lot of people that are smarter than me now, and it's just the older that I've gotten, I just like, and also by the way, like people start to separate themselves over time, right? Like I have people that I went to college with, and I look at their career now, I'm like, oh wow, this guy is like done so well, and it's everybody compares, but I've gotten to the point now where I'm like, if you constantly are doing that, like you're just never gonna. I feel like you're never gonna find happiness, and you're never gonna be content. But to your point, it's really about like competing against yourself, and are you doing the best that you can do? Are you being the best that you can be? And are you better than the version of you from yesterday or the version of you who ran the last half marathon? Like, did you beat your time from last time? Right. And as long as you're doing your best, then really there's nothing to be you're leaving it all out there. There's no regrets and there's nothing to be unhappy about. Right. In fact, it's like you will be very happy. I feel like anyone who's like who knows they look in the mirror that they're doing their best, they're very happy. They're very content. It's like the athletes that even when they like lose in the championship game or whatever, and they're like, yeah, but I left it all out there and like I have no regrets. Right? Of course you want to win, but ultimately what's important is that you're constantly getting better day after day, year after year. And I feel like that's part of the journey of being human. Like It's about the process. It's about the journey. Or what is that quote? Like the journey is the destination or something like that. I don't know. I'm probably butchering it, but I think there's a lot of truth to that, right?
Absolutely. Well said.
So last question for you, and then I know we got to wrap it up because I'm gonna let you
Sure.
get back to your wedding planning.
Yeah.
If you could go back and give your younger self just one piece of advice, like what would be your best piece of advice, I guess, knowing all the things that you know now?
Yeah. I think I would probably rewind that little conversation you and I just had about, giving your best and giving yourself time to just improve on your own. I think that's really good advice. Man, I look back, I mean, I was so impatient to get to where I am today. And I think I look back on 2013 version of me, like 5 years out of school, leaving Kosla. I went and did those entrepreneurial things, and I like learned a lot from those experiences. I wish I had gone to ServiceNow 5 years earlier, um, and started that process. And I think there was probably a bit of arrogance in me, um, and feeling better than in certain ways, and feeling like I didn't want to start on a bottom rung of a ladder. I think it's so hard to not have an ego about your job and have an ego about being told what to do. It's really, really hard. But to that point, when I found people that I really trust and admire to work for, it hasn't been that hard. So I think don't be afraid to take a job where you're one of many. You're a cog in the wheel. Cogs in the wheel to some extent, but to find that person that you're willing to, you trust and admire, that like when they give you that work, that you feel confident that you're going in the right place and that they're going to give you the opportunity to grow. The other piece of advice I would say is, like, as we've seen from my experience, and my experience isn't necessarily emblematic of everyone's experience, but like there will be twists and turns in your career. You don't exactly know how it's going to go. And if you think there's going to be one straight path, like it's just not. And as many times as people can tell you that, like it's just not. You can keep trying to fight for it, but like it won't happen as you intend, whether it's being an entrepreneur or if you sit and work at public companies your whole life, like it just won't all play out as you think. And so being patient, being humble, and rolling with it is super important as well.
Absolutely. Absolutely. Yeah, I think when we're younger, we all envision that our career trajectory is going to be this line that's just like up and to the right, straight line. And in reality, it's like this super messy, squiggly thing that, like, sometimes you take all these detours or you take two steps forward, then you got to take one step back and whatever. But that's what real success looks like, right? In my experience, anyway. And I think your point about working for the right person is really on point too in my own experience. Just like that's probably the most important thing is who are you working for, right? And I think they've done surveys about this. It's like the number one reason why people leave a job or quit is because of their boss. But like if you can, in my experience, like I've had some amazing bosses and also had some terrible bosses, and I can say with certainty that if you do not get along with your boss for whatever reason, not saying it's always because they're terrible, but sometimes you're just not compatible or whatever. But if you don't get along with your boss, like it's impossible for you to thrive or be successful in your role. And the opposite is also true. Is like if you have a boss that you really get along with and they're looking out for you and they really want what's best for you, that is going to massively, I think, accelerate your career because also like you have someone that's looking out for you and taking you under their wings. And I think that can't be overstated. Any new job that you evaluate, I think one of the most important things to evaluate is like, do you like the person that you're going to be working for, and do you trust them, right?
Yeah. Yes.
Uh, so I think that's really good advice. On that note, again, I'm just going to plug this again, but you guys have gotten I feel like a pretty deep insight into the type of guy Matt is through this interview. Hopefully, if you guys kind of like what you've seen, I think Matt's a great guy. I've known him for many years, but again, he is hiring. So, if you want him to be your boss, then I would highly encourage you to apply. And honestly, it sounds like a great company. I mean, if you can work for a great guy at a great company, especially early on in your career, I think it could do wonders for just your career trajectory and your level of success in general. With that said, Matt, again, I want to thank you so much for taking the time to come on this podcast and record this episode. I know it was definitely difficult for us to find time with my travels and your upcoming wedding and you starting a new job, and definitely don't take it for granted that and you're doing this on a weekend too. So I really appreciate you coming on here and sharing so many insights with our audience. I think it's been really valuable, and I'm sure they learned a ton. Yeah, man, it's also great catching up. And now that I've move to the city, I think, let's try to meet up in person sometime too. So,
I love this too. This was really a lot of fun, and kudos to everything that you've built at Wall Street Mastermind. I know it's taken a lot of hard work as well, and you're providing a lot of value to your audience. So kudos to you as well. Thanks for your time as well.
yeah, absolutely, man. It's exciting to see the scale that Kotula has gotten to. That's very inspirational for a business like ours.
Absolutely.
Awesome, man. Well, it's good catching up, and hopefully, we'll meet up in person soon.
Thank you. Enjoy your day.
All right, man. And also, good luck on your wedding, dude. Enjoy that.
Thank you
All
so
right.
much.
See ya.